Hello, I'm David Penn, Research Analyst with the Finovate Group. Thank you for joining us for our Finovate FinTech Halftime Review Series. Today's presentation is Supporting Stimulus Lending Programs with Appian. Appian is a leading low-code automation platform that accelerates the creation of high-impact business applications. Organizations around the world use Appian's technology to enhance the customer experience, achieve operational excellence, and simplify risk management and compliance. Our guests for the hour are Laura Paul and Herbert Schild, both global industry leads for financial services with Appian. Also joining us is Jennifer Durina. She's the Appian Solutions Consultant who will demonstrate Appian's technology a little later in our program. Before we begin, please note that this is an interactive presentation and we invite your questions. So please use the Ask a Question button at the bottom of your screen to send your questions to us, and we'll take them up toward the end of the presentation. With that, we've got quite a bit to cover today, so let's go ahead and get started. First, Laura and Herbert, thank you very much for joining us today.
Thank you, David. Very happy to be here.
So let's go ahead and get started. Yes, Herbert, and let's go ahead and get started with sort of an overview. What is meant by the term stimulus lending, and what are some of the programs that have been implemented?
Thanks so much. As I said, very happy to be here with you all. Thank you, everybody, for joining. So governments and central banks around the world have enacted extensive stimulus measures to provide much-needed liquidity and funding to the market. In many cases, businesses are struggling, as we're all probably well aware. And the intention of these programs has been to provide lending vehicles that will get money out to those that need it quickly, though there have been challenges with this. But with that objective in mind, several programs have been implemented. Here in the UK, the Coronavirus Business Interruption Loan Scheme, or CBILS, was introduced and went into effect on March 23rd. It's intended to provide support to small and medium-sized enterprises with annual turnover less than £45 million, whose revenue and cash flows have been negatively impacted by the COVID-19 crisis. Businesses can apply for up to £5 million in term loans or asset finance facilities up to a 6-year term, or overdrafts and invoice finance facilities up to a 3-year term. And the government is backing 80% of any outstanding balance of a loan in the event of a default, and also covering the first 12 months of interest payments and fees through a business interruption payment. The Bounce Back Loan Scheme, also in the UK, which is also aimed at SMEs, was subsequently introduced on May 4th after some concern that funding wasn't getting to market quickly enough to the small businesses that needed it. And with BBLS, there's a short list of questions for qualification, really intended to shorten the time frame required to approve these loans. And in this case, the government is backing 100% of any outstanding balance to further incent banks to extend loans. The loan amount, however, is lower with a cap of $50,000. Fees and first year of interest payments are covered by the government, and no repayment is required during the first year. Also a difference from CBILS, the interest rate is set at 2.5%, where with CBILS, banks are able to set the rate. But BBLS has really proven to be a more utilized loan type, exceeding CBILS demand early on. According to the British Business Bank, as of June 16th, BBLS loans totaled $26 billion versus $10 billion in CBILS loans. And a greater percentage of loans have been approved, though there's still a pretty healthy backlog in demand. But another one actually that came out targeted at large businesses is the Coronavirus Large Business Interruption Loan Scheme. That went into effect on April 20th, similar to CBILS, but supporting businesses with annual turnover greater than £45 million. And these companies can apply for a term loan, revolving credit, invoice finance, or asset finance facilities up to $25 million or £50 million, depending on their annual turnover. And in this case, the government is also providing an 80% guarantee, covering, in this case, principal, interest, and fees. In the U.S., of course, the Paycheck Protection Program was enacted as part of the Coronavirus Aid, Relief, and Economic Security, or CARES Act. And PPP is administered by the Small Business Administration. It provides for loans to small businesses with the purpose of maintaining payroll and continuing to employ workers. There's an element of forgiveness with PPP, whereby the loan will be fully or partially forgiven if certain conditions are met. And with one of those primary requirements being at least 60% of the forgiven amount has to be used for payroll. And then the Federal Reserve established a Main Street lending program with $600 billion in funds available. Unlike PPP, here the loans are not forgivable and they're not connected either to payroll requirements. So clearly a lot of initiatives to get funding to market, including various programs in other geographies as well. But in consideration of time, I'll pass it over to my colleague, Herbert Schild, or I'll pass it back to David, and then maybe Herbert can talk a little bit about some of the other programs that have been established throughout Europe.
Yeah, thank you, Laura. So we've just heard from Laura that the US and Great Britain instituted lending programs with very specific eligibility criteria and selectively participating financial institutions. And we've also seen similar approaches across Europe, such as in Switzerland, Austria, or in some of the Benelux states in Northern Europe, as well as in the Asia-Pacific regions, all the way down to Australia and New Zealand. From a global perspective, as it relates to stimulus programs, we have seen similar efforts from governments passing legislation to enable support measures, for example, the deferral of Social Security contributions by health insurance companies, tax support measures by tax authorities, short-term work benefits, grants, fast loan and credit programs, and many more initiatives. Especially for those fast loan and credit programs, control banks cut interest rates, which in many cases brought the rates down close to zero, or actually even into negative territory, which has its own implications and challenges. It also included actions such as quantitative easing with governments stepping up to buy bonds in the secondary markets to ensure appropriate liquidity and thereby lowering borrowing costs and freeing up credit that can then flow through to companies and households that need loans to survive or to make those long-term investments that can stimulate the economy. And it's exactly that kind of liquidity that actually allows for those fast lending programs to be established and issued by financial institutions.
Sure. Yeah, I think that provides us a pretty good overview. And maybe before we move on to look more specifically at some of the challenges faced by financial services organizations, we could take a look at maybe some of the key similarities and differences of some of the programs that you've talked about.
Yeah, I'd be happy to take that, David. So with respect to the stimulus lending on those fast loan credit programs, a lot of the requirements are set up by a program is really driven by those socioeconomic structures in the country. So that's why you see a lot of varying differences. For example, in Germany, you got 99.5% literally of all companies are basically medium-sized companies, and they generate around 35% of total sales and provide almost 60% of all jobs. So it's really vital that the lending programs can be tailored to support those sectors. And in my mind, that means always two things: speed and flexibility. These two are key. And then you got your control banks or the development banks that are also playing here an important role because they act as grantors for those loans, which in theory should speed up the loan qualification approval process. And again, for example, in Germany, which is a federal republic, it consists of 16 partly sovereign states. Each state has its own development bank that acts as its own loan grantor. In other countries in the world, you've got either similar structures or you have state-owned control banks that assume such a guaranteeing function. On the other hand, if you look in Europe, more down south into southern Europe, to countries such as Spain or Italy, governments there also have implemented relief measures from a tax or work benefit perspective, but their approach to lending is different because they already had an infrastructure in place due to maybe past emergency programs related to earthquakes or natural disasters. So the process of approving and issuing loans is pretty mature. However, these processes have high overhead costs with many manual steps in between, which is a challenge for those banks. And because of the different degrees of maturity, it relates to the automation of the end-to-end lending process. This is really where I think the key crux in the systems very often are, because you need a high degree of flexibility to often administer loans and products and also adhere to those changing requirements of the stimulus programs. And part of this effort is also the desire to enable a faster transfer of liquidity, because that's really the ultimate goal, to where it's really needed. And this is accomplished by expanding on already existing lending products and using additional guarantees to accelerate the approval and issuance process. So, David, circling back to your question on those differences, each of those development banks or control banks have quite a wide latitude to decide and to what extent they should tailor their lending products, especially when it comes to managing the requirements that pre-qualify a company or a customer for a particular loan. So, for example, eligibility is typically determined through questionnaires of varying complexity and length. You see that everywhere when a customer or a company wants to apply for a loan, and it's typically available online. Some are purely still paper-based. And so it really depends on the country's specific requirements, regulations, and lending institutions, and also what a bank or financial institution kind of internal policies and procedures require. And all those differences, when you think about now external, internal, create a lot of complexities. Those require, again, a high degree of flexibility in business process flows and also, which really is important for customers, in the user interfaces. And then, even if you think about not just the requirements from a program perspective, we just look at the banks themselves that have to manage those loans. Because depending on the loan product, you've got financial institutions that need to incorporate and reconcile those pre-qualifying information that you get from the questionnaires, right? So they have to ingest the data, they have to reconcile that data with information they have about the customer already, or about the company with the in-house system. So there's an integration part with that. They, in the end-to-end process, may have to update their associated risk rating models. And despite, because there are available loan guarantees, they may still need to run the loan application through the various internal compliance requirements. And in many cases, they also have to communicate those details of the loan to the guaranteeing institution. And in some cases, actually have to get the approval before they're actually issuing that loan. So you have all these varying factors that are dependent on the structure of how the lending process in a bank is being administered. You need that high degree of adaptability in the lending cycle. And then specifically now with employees working remotely, you need still a lot of manual activities that they need to administer through.
Excellent, excellent. Very helpful. I want to talk a little bit more, and you sort of led up to it in your last remark, pivoting to talk a little bit about some of the specific challenges faced by financial institutions to take advantage of some of these opportunities. And perhaps, Laura, we could pivot back to you to address that question in terms of what some of the issues financial institutions are facing in light of the various stimulus lending programs.
Sure. I'll take that. Thanks, David. While the intention of these programs is all well and good, and of course a much-needed injection of funding into the market, as well as a lifeline really to some of these businesses in many cases, these emergency lending programs really do pose some pretty significant challenges for financial institutions. Herbert just touched on some of these. Standing up a process to manage the huge influx of loan applications in a very, relatively speaking, short period of time is not really something financial institutions are generally set up to do. Typically, the time frame typically is more along the lines of 18 to 24 months to put processes in place to support various regulations. There's essentially lead time to prepare from the time the regulation is announced until the time it goes into effect. And in this case, there just isn't that time. So financial institutions need to stand up a solution quickly, really to effectively respond to the significant volume of applications. They need to quickly deploy business rules to govern to specific requirements of a particular program, as well as integrate with existing bank systems of record, for example, servicing and general ledger. And then also identify and manage fraud, which is certainly a concern in this situation. So there's really a whole host of challenges, which are also amplified by the fact that there are typically a lot of underlying manual processes in place. And it typically can takes companies a long time to deploy a digital solution. But the good news is that there is opportunity here to use low-code automation to quickly build or enhance the process to gain operational efficiencies and really optimize the customer experience.
Sure, sure. Let me ask you this. What are some of the things that financial institutions can do to better serve their customers right now?
David, I think that financial institutions really just need to take another hard and honest look at their existing products and services and determine how to better connect with the customers besides just making some modifications to a loan or delaying a couple of payments. And I personally see really a huge opportunity to establish meaningful long-term customer relationships, which is becoming even more important as it becomes so much easier for customers to just switch from one institution to the next. And let's be honest, it's not just those brick and mortar competition playing in that field. I mean, you've got your online banking, you've got your online service providers that are also looking for that edge, as well as any established banks that are trying to really now to expand the digital presence. And even online banks have, when you think about typically online banks, okay, they're online, but they have tremendous needs to further digitize, especially when it comes to middle and back office activities. So I would say financial institutions should really take another look at the digital transformation activities, look at the business case and underlying assumptions, in particular as it relates to what their customer base right now is looking for, and how those specific needs are reflected in the various project streams of such a digitization program. And I also think that they probably need to look at about automation in the context of leverage. I mean, how can I leverage applications that I have developed in one area and then be able to use them or at least components of that in other areas with minimal modifications, which then really I'm able to speed up deployment and ultimately achieve a faster return on my investments. And I think what Laura said before is using low-code automation in that context of organizing and orchestrating and integrating digital processes into one platform and then reusing those functions for other areas is really, in my mind, a key success element for any such a digital transformation program.
Sure. You mentioned digitalization a couple of times in your last response. Would you still say that it's a priority for organizations given the challenges that we're dealing with COVID-19?
Yes, definitely yes. I would even argue that the effects of COVID-19 on customer expectations as well as employee enablement has shown to financial institutions that they not only need to accelerate their transformation activities towards digitalization, but they also need to adapt their medium and long-term strategic plans to accomplish milestones much earlier. I mean, we've seen in recent years those demographic changes that are driving much of the digital demand. And I think with this new paradigm shift towards a remote work environment and social distancing requirements, we can even expect to see this trend increasing exponentially.
Interesting. As we start to take a closer look at some of the ways that Appian is able to help organizations, I wonder if we could just maybe briefly address the situation with sort of out-of-the-box lending solutions and maybe what some of the limitations are in that respect. Can you touch on that just a little bit?
Yeah, sure. I mean, I mentioned it before, speed and flexibility are key, and automation needs to be able to adapt to an institution's environment and not force a customer into like a specific framework or an operating model. And that's what we often find with these commercially off-the-shelf, we call them COTS solutions, right? And I think financial institutions that are using out-of-the-box solutions seem to find it often difficult to be able to adapt those solutions within their own environments, which really ultimately means that they have to adapt their environment to the solution. And they usually have to adhere to a specific framework the solution forces them into, and ultimately makes them highly dependent on the solution provider. And that almost always causes significant implementation delays, requires much more internal resources to get to a minimal viable product, and you're at the mercy of the solution provider when it comes to new functionalities, upgrades, or enhancements.
Sure.
And I have to tell you, I've always found it quite interesting that it's actually mostly IT companies that are developing business frameworks and are using them as a basis for their solutions instead of allowing the financial institution to leverage their own framework, providing a solution that supports automation within that environment. Because let's be honest, financial institutions know much better how to run their business and are simply looking for a tool that allows them to digitize faster while tailoring to their needs. And so every financial institution is different, and automation, in my mind, has to be able to seamlessly adapt and integrate with each individual environment.
Absolutely. Makes a ton of sense. Let's go ahead and take a look a little bit more closely now at Appian itself, at the platform itself. I'm curious, where is Appian typically used in the lending process? And maybe, Laura, you could start us off with that one.
Sure, I'd be happy to. So first of all, I imagine many of you may be familiar with Appian, but I'll provide just a brief overview. Appian is a low-code development platform for building enterprise software applications with full-stack automation, so workflow, decision rules, case management, artificial intelligence, and robotic process automation. And we've got a strong presence in financial services. In fact, FS is Appian's largest and fastest growing vertical. And Appian is really used quite often in the lending space across the entire lending lifecycle. So financial institutions build applications on Appian to manage loan origination, loan management, early warning alert, so they can identify an issue early and potentially take action to prevent a loan from defaulting, credit risk review, non-performing loan process, as some examples. And there are many other industries, I should note, in addition to financial services, where customers build on the platform as well, really spanning customer-facing, middle office, and back office applications. With respect to stimulus lending, Appian has deployed an application that supports the full life cycle of a stimulus loan with the ability to customize to meet the requirements of the respective program. So this encompasses intake of loan applications, and that's supporting multiple channels. So however that application comes in, whether it's online, through a call center, via a relationship manager, by email or paper mail, all channels are supported. And then determination of loan eligibility and qualification, as well as collection of digital signatures. Document and data collection and packaging for submission to the respective government agencies. So the British Business Bank in the UK or the Small Business Administration in the US, for example. And that can be done either using Appian RPA bots or via APIs, depending on what's available in each case. There's also in the application end-to-end tracking of loans, I should say in one application, with complete reporting and audit trail for easy visibility into loan processing and to ensure compliance. For example, maybe the ability to prove that an equitable lending process was followed, as well as fraud management, so detecting multiple applications from the same applicant or a non-existent business, for example. I mean, importantly, the Appian platform is built for speed and for change. You can quickly stand up processes and you can adapt those as requirements change, which, of course, is particularly important in this really evolving situation.
Sure. It seems like, hearing you describe it, that so much of the administrative guidance evolves from day to day. What if I implement Appian to manage these loans and some of the criteria, the rules, the rates change after the fact?
Very good question. So this is something that it certainly needs to be a consideration when deploying a lending application. Particularly in this environment, change is inevitable as circumstances continue to evolve. And really having the ability to quickly respond to those changes, whether they're regulatory or business-driven, is critical. As I mentioned earlier, the Appian platform is built for speed and it's built for change. You can easily and quickly modify applications to support any changes, really without skipping a beat. I would strongly recommend that you consider this important ability to respond quickly when you're considering your application strategy. Of course, an important capability with something like stimulus lending measures that are evolving, but also generally, as there's often a need in all different types of applications to quickly make modifications to support changing business or market conditions or regulatory requirements. I would contend that this is not necessarily something that can be done easily with a lot of the systems that are out there, and it's certainly something that should be closely looked at and considered.
Sure. What if sort of going on the opposite end of the spectrum? You have somebody who just walks right into a branch with paper application, just like old days. Can Appian handle paper as well?
Yes. So, of course, that does happen, though perhaps less likely in the COVID environment we find ourselves in today. But certainly some people, that's the way it still works. So, yes, Appian supports all types of channels for document intake. I think I might have mentioned earlier, paper, be that via mail, post, or paper in the branch, email, online application, or application through someone's relationship manager. However a customer chooses to apply is supported.
Okay. Well, here's another scenario that you might run into. What if you have a company that wants to build an application to speed up and accelerate and enhance their process while still using some of the aspects of their existing lending systems? Is that something that's possible with Appian as well?
I can take that, David. Yes, certainly possible. I mean, any process that works well currently, in my mind, should continue to work for the lending process. But you always have segments in the process that need more automation and more integration, or there's just a better way of doing things, right? And so I actually think that this is one of the core strengths of the Appian platform due to our full stack automation capabilities. Typically, if there is, and Laura had alluded a little bit to it, if there is an API existing, connecting with the system is quite fast. And we may actually have the connector already available in our library. And that connector can be connecting to an internal system, banking core system, a GRC platform, whatever it is, or with external information sources that you need for your KYC, for your EML monitoring, etc. And I think that's where our term of Appian's full stack automation, which features RPA, is very important, because if you don't have an API available, then you use robotic process automation for that. And I call them sort of pseudo connectors for such an integration. However, one should also not forget that companies and their IT infrastructure also need to become, let's say, much more agile when it comes to enhancing or delivering new digital services, just simply to be able to compete from a cost perspective. And therefore, IT departments are more and more thinking about how to consolidate functions and systems without interrupting or negatively impacting the business side and the customer. And with the Appian platform, you can not only integrate with and leverage existing functions from, let's say, a lending system, you can also think of Appian as sort of an orchestration layer for IT systems and processes. So basically, it's like a platform that acts as an intermediary between IT, the business, and customers, that allow then IT to manage, for example, the retirement of a legacy system while moving the process onto the Appian platform without interruption to the business side. And this allows IT being more strategic, having more strategic options, and I would argue actually more time to really select the right solution. But they're always under pressure, right, to move where basically the wind blows. And it allows for more time to define the right use case and execute in a much more streamlined fashion, and then actually achieve the ROI that is typically laid out in the beginning, but often not achieved after the implementation.
Sure. Very, very interesting. Let me ask you, as we're going to go ahead and transition towards the demo here in just a moment, but I just wanted to ask, given all that you've said, how long does it take for a company to build a stimulus lending application on Appian? How long does that process take?
So in order to get to a first minimum viable product, an MVP, I would say about 1 to 2 weeks.
Oh.
It does depend, though, on the number of integrations to the systems, or, like the core banking system, an accounting system, or you may want to integrate with a risk and compliance system, or an integration with some external services and information providers that are really crucial to your end-to-end lending process. And then you cannot also forget, and we're talking about scope, is there also are geographical dependencies, like the number of countries involved for the process, and subsequently the number of users, and some of the more specific requirements, because there's always, some must-haves versus those nice-to-haves. And then if we take all those sort of dependencies into consideration, I would say an implementation may then take a couple of weeks longer, up to maybe a couple of months, to achieve a really comprehensive, full end-to-end automation lifecycle. And, even if it's a couple of months, those short implementation timeframes are really only possible with low-code automation, especially compared to out-of-the-box solutions that may take 6 months, a year, or even longer.
Right, right. Excellent. Well, let's go ahead and we talked so much about the platform. Let's go ahead and let folks get a look, sort of, at see how the platform works. Again, we've got Jennifer Dorina, who's going to be helping us with this component of the presentation, sort of giving us a little bit of a look at how Appian does some of the work that we've been talking about today. Jennifer, we've got you there on the line.
Yes, thank you, David. And I'm just waiting for my screen to show up so I can talk you through some of the things that we've built on Appian to support particularly the Schild program in the UK. But I think it's really important to point out, Laura introduced the Schild program earlier in this discussion, but really, since Appian provides a platform, this could be built for any other loan scheme or any other program that we need to. So these are all very much configurations that we've put together, but they're very easy to change. That's really the power of Appian, is that once I build something, it's very easy to update it as either regulations change or in this case as even different programs deviate. So I am starting within the context of a customer who's already a customer for this blue bank. So I'm an existing customer because a lot of the scopes of these loan schemes were for banks providing their current customers with these loans. And here I have a screen that I can interact with to manage my account and my relationship with the bank, but also I can apply specifically for these new loans. And that's going to start to launch one of the aspects of Appian that the tool provides, which is a workflow. So I'm starting the workflow or the business process of applying for a new loan. So when I launch that, we've set up some different pre-existing criteria that you have to meet in order to get through this. And again, these are fully configurable, so depending on the scheme or the loan program, there might be different eligibility criteria. Or even for different banks, you might have different criteria of who you might want to accept. So I will say, yes, I've been adversely impacted. So I'm allowed to then put some other criteria through. That's my initial step. And you can see we're moving slowly through this workflow. And the next piece that I need to do is I'm going to enter my company number, and we're going to check against a Companies House database, so a public record where I can get information about the company so that they can do some eligibility criteria check on that, which really highlights one of Appian's other core strengths, which is the ability to interact with data from anywhere. So it's easy to get to these powerful integrations and pull back data from either public or private sources. So if I put a company number in, it's pulled in details from it. The company is active. It's in the country for this lending scheme, but we've also put in some validations, so some rules that say, hey, if you've applied once, you can't apply again. So we're trying to alert if perhaps they're going to be applying for something that they don't need to or they can't necessarily. And so we can stop those and apply these business rules that we've implemented to stop bad applications getting too far. But if I put in one that hasn't applied yet, my company is initially meeting the criteria. I then, as the applicant, will say that I follow these next criteria. Again, these are completely configurable, so we can make that whatever we want. We can make these thresholds different. We can make these completely different indicators. And then once I submit that, I'll get an initial eligibility score, whether I can move on or not. And if I continue, great. We are ready to go, and we meet the criteria for this specific loan scheme. Again, that doesn't have to be Schild. It could be the PBL in the UK or the PPP Payment Protection Program in the US or any other country's program. But once I am ready to go, now I need to collect some documents and continue on to actually start my application. So I know I'm eligible, but now I need to fill out some details about myself to get further on in the process. And this is where Laura mentioned we really have a lot of options as a platform. So I could enter all of my details right here within a digital portal where I get lots of forms one after another that I fill out directly here on the screen. Or if we're talking about those paper programs where you already have paper forms or perhaps PDFs, I can simply upload that, and then the system can ingest it and figure out what I've put in the paper document and digitize that. Similarly, I don't have to physically upload it here. That document could come from, let's say, an email. So maybe somebody emails their relationship manager, and that detail all gets sent through to this process. Or perhaps we're integrating with another custom portal that customers interact with, and we're just passing the data on to Appian through an integration like an API, or perhaps if it's diving into core banking systems using robotic process automation to copy that data over. But either way, we have a lot of different options. And then if I were to choose one of them, let's say the wizard, then I would start to fill out a number of forms to put details in about my company. And we would move that through, and I have these different steps. I can trace where I am at any different point. I can save it and come back to it if I need to as well. So I would follow that through, and for time's sakes, and we've seen one form, I won't take us through the entire form, but I would put my information in, and then I'd be able to complete my application. Now, if I go back, leave that for another day, once the user or the customer applies, then they can also check the status of their loan, keep an eye on where it currently is, because as we all know, an application is just the start of the workflow. Or I can view the products that I have or my relationship with the bank currently. Similarly, we can also integrate with tools like chatbots to provide online help for the customer to make their experience as easy to use as possible. So that's one side, the customer. But really, we also want to see what the bank would see. How are they interacting with these applications that come in? And also, we can tie into those other systems that perhaps when I apply, that then sends information to our underwriting systems. But it's the loan team on the bank side that would want to see that information. So I'm going to change my view now to a loan management view. And this is what the loan management team would see when they came in. So it's quite a different experience to what the customer had, but we have everything that they need to make decisions, to make informed actions, all on this one page. So we have a number of key indicators. For instance, my relationship as a bank with the underwriting British business bank, as well as a look at all of our loan requests and how much we're looking at lending out. And then we also not have just business metrics like at the top, but processing metrics around with these different workflows, how we're going through them. So how many are we completing? How long does it take? And if we're looking at loans that take months to complete for an application, perhaps we want to optimize our process a bit, and we can keep an eye on those statistics. I also have actions as far as what I need to see in different queues. So if I have a number of applications, I have queues that I can pick out at different points, where in this case there's some action to submit a document packet. And there I have all of my actions that I need to use in one place. Or perhaps I want to keep an eye on my different applications based on their deadlines or SLAs. I can make sure that I meet those SLAs by quickly showing those at the top so people know what they need to work on. And if this is more of a process metrics, we also have the more business metrics around the details of our loans. So if we're looking across a geographic area, or perhaps who gets rejected or approved in different places, we can use that data to then do our own analytics. Now, this is an overview of the loans, but if I dive into the requests themselves and look at individuals, I can go to what's called an Appian Record. So an Appian Record is just the thing that's important to me as the user. So as a loan manager, it's the loans that are important. So we've surfaced this information that can come, again, from a lot of different locations. It doesn't have to be stored in Appian. It can be in your core banking systems. Appian's real strength is its integration capabilities, so we can get that data from anywhere. But let's dive in specifically to one of the loan requests that has been completed and see what we would look at around that loan. So if I pull up one of my loans, I can keep track of where it currently is. So we've submitted it for approval at a separate step. We've gone through all of our underwriting. We've collected signatures. And now we are getting final approval from our country bank to underwrite it. But I have my details about the customer, including your KYC details, the loan information, how to contact them, as well as a lot of other details, whether it's the things that they signed off on by initialing, or questions that they answered yes or no to, or perhaps their current relationship with the bank. So I mentioned before that we're assuming these are existing customers, so they probably already have some relationship that would be nice to know in order to approve certain loans. So I have a quick snapshot of what the account details are, and this can easily tie into the core banking system that, again, Appian isn't having anything to do with, but those are the systems that the bank is happy with and are working well, and rather than trying to replace it or do something different than that, we can leverage the good work that the bank has done. And we can do that using robotics process automation, or if there are modern APIs to connect to. Another piece that we've put is a document management capability. So Appian has a document management capability within the tool itself, but we can also easily pull data and pull documents or push them to your own document management systems. But if I dive into this loan request, we can see the documents that the applicant uploaded. So they uploaded details about their financials, but also documents that this process has generated. So we generated a loan application PDF, and if I look at that PDF, it has details about the business, information entered in a more, say, common format or used format in a lot of different places. But we have also collected signatures through this, whether it's a wet signature or one that's a digital signature by leveraging another tool like DocuSign. So this was actually used and signed using DocuSign, which means we can not just integrate with other sources of information for data, but we can also integrate with different tools that do other things. Like DocuSign is really good at collecting and managing the flow of digital signatures. We can, rather than trying to just replicate that and build it, recreate the wheel, we can leverage the tools that do certain things really well and embed that functionality directly in the tool. So that is a look at the record of our loan requests. But if we also take a look at some of the other capabilities that this tool has, we can also start to assign tasks to people and have them take action on certain steps within a workflow. So this is where a human gets involved to do something. And in this case, I would be able to see all of the tasks that I need to complete, including things like deadlines, again, meeting those SLAs, but also I can see performance across different groups, across different individuals, and over time start to analyze trends around those tasks. But one of the tasks I have in my list is one that allows me to reconcile loan applications. So we talked about lots of different ways for an application to come in. One is to fill it all out with a form in the tool, but there's another option where we can upload PDFs, let's say, or upload those paper files that have been scanned in. And we need to look at that data and pull it out into the system. So what we've done is we've created a task for a user to view that task and view that paper form that's come in, and just to double check it. And they don't need to actually do very much here because we're leveraging artificial intelligence in this task to take a look at the paper form, or in this case a PDF form that's been completed, and simply look for the appropriate fields and pull it in. Now a human has this task because sometimes these fields are matching which we have the company name matching just fine, the phone number came through, but some of them perhaps aren't picked up as the right fields, or for instance with owner name, the AI was not smart enough to pull in that data. And this is leveraging Google's AI capabilities. And the reason it's artificial intelligence is because when we correct this, so when I say the owner name is Kate Crawley, I will submit that, and we'll then send that information back to the artificial intelligence algorithm, so it'll start to learn from the corrections I make. So the next time something comes through, it'll know owner name should be the field below it. So we're leveraging all types of different technologies to make the most intelligent but also user-friendly application. So as a user, I don't have to manually check this and fill it in. All I have to do is double check the AI's work. And if I trust the AI well enough, perhaps if it has a certain threshold of confidence, maybe we don't send it to a person at all. And we can automate that completely. And I could then fill all those fields out. And the last step here, or the last piece that we have that I wanted to mention, is the configuration side. So the ability to add configurations so that I, from the front end, can manage these changes if and when they change. So the loan application programs all have very different criteria, but also things have been changing. So different thresholds that you need to meet have been changing as the applications come in and as the situation for coronavirus has changed. So in this case, we've made it very easy to change those types of thresholds right in the front end for a loan management team. So maybe I no longer have a minimum loan amount, so I don't need to worry about people asking for a certain amount. And maybe I change the maximum amount so when people are entering it in, they no longer get errors when they're asking for too much. And we can put that down to even what types of loans we provide, as well as even questions that we ask to qualify people for the loans. So again, as things change, I could go in and add different criteria that if they initial or if they say yes to, then we can allow them to move on. So I can ask, is the applicant a registered in Scotland? And perhaps that sends a different flow, and we can apply that dynamically. Now, that's the front end. So that's what an application to use it would look like. But really the power of Appian is the low-code capability that it takes to build all of this. So we can surface different changes in the front end, but even back-end IT changes are quite straightforward and easy to do due to the low-code capability. So for instance, if I wanted to change my loan application flow, this is what that would look like. This is another tab that I have open that's in the back end that as a designer, this is how I choose what's going to actually happen. So this is where I say, all right, I can either start it from a digital form or with an email, and I can choose how it does that, and I can configure it to do so. And we can have automated tasks like creating folders to manage those documents, but also tasks that are done by people that they then need to fill in a form for. So for the choose path, that's where we're choosing, are we going to go through that wizard where we're capturing all the information, or are they just going to upload that PDF document perhaps? And we can have a combination of these automated tasks and these human tasks work together to capture information from people, but also enter data to other systems, put in rules to make decisions to change the flow, and other capabilities. And this is all a drag and drop environment. So if I look at my palette on the left-hand side, if I wanted to perhaps integrate with another system at one point, perhaps before I write the application data on this flow, I can simply drag and drop that into the tool. And if I open up the properties, I then can configure it to do what I want. And I can apply things like escalations if this doesn't get done in a certain amount of time, or I can apply deadlines, which might not be as important for an integration, but may be important for human tasks. And I can choose what type of data I'm getting and particularly where that's coming from with my integration that I can create directly here and then call. So altogether, this is, you can see, not really a lot of coding. It's not a lot of difficult capability to build. The strong point of Appian is you don't have to be a super technical coder to build still an enterprise-wide application. It's a drag and drop interface that allows us to do things quickly, but also do it easily. And I think that is the last that I wanted to show of the Appian platform. So I will give it back to David to wrap this up.
Great. Thank you very much, Jennifer. That was a really, really excellent demonstration, very easy to follow. I think a lot of times folks hear low code and they just want to know just how low code is it. And it was really, really great to have you walk us through that and just to really get a sense of operating and using the platform. We've got about 10 minutes, just under 10 minutes left for our presentation. I do want to remind all of those of you who are out there listening that we are taking questions. If you do have questions for us, we do have a little bit of time reserved that we're going to address those. We have a few questions that have come in, but if you have something that you'd like to ask Laura or Herbert or Jennifer or all of them, please go ahead and use that Ask a Question button at the bottom of your screen, and we'll be happy to address those questions. The first one we're going to start off with is, let's see, what will be some of the long-term lessons from this crisis for institutional lending in terms of digitization? And maybe we can send that to you, Laura, to start us off.
Sure. Great question. I think one of the bigger lessons is that it's really so important to ensure that you have an approach to digitization that allows you to quickly deploy an application, to capitalize on an opportunity, or to quickly modify an application you already have in place, really so that you can respond quickly to changing business, regulatory, or market conditions. I mean, speed and flexibility are really key. The ability to employ workflow, case management, AI, RPA, to effectively orchestrate people, process, and data for the best possible outcomes in terms of customer experience and operational efficiencies. All of these things are important. We really no longer have the time we once did to react effectively. And so having a digital platform in place that allows your organization to be nimble and innovative in today's environment is really a competitive advantage.
Mm-hmm. Mm-hmm. One of the other questions that came up, and this is another incredibly topical question, so no surprise that it was asked, and this has to do with data. And it asks, when using Appian, what happens to my data? Will I have to migrate it from the systems that I'm currently using? And maybe, Laura, would you like to maybe start us off with that one as well?
Sure. Thanks for the question. So this is one of the core differentiators of Appian. You have total control over your data. So there's never a need to migrate any data if you choose not to. You can simply expose the data you need from various systems so that you have it all in one place with a single pane of glass view, while leaving it intact where it resides in the various source systems of record.
Excellent. Here's another question that I wanted to take a look at, and this has to do with some of the themes that I think both of you were mentioning in terms of pre-existing trends that have been accelerated by the current situation. And this question asks, besides trends in accelerated lending and fast credit, are there other emerging trends that Appian sees in the market?
Yeah, David, I'd be able to take that one. Yeah, definitely. We have a large suite of applications, not only financial services. Laura had mentioned at the beginning, across basically every industry, may it be healthcare, may it be insurance, pharmaceuticals, life science, public sector, you name it. And it's interesting that when you look at financial services needs, for example, in the government's risk and compliance space, you come across similar topics always on those other public, in those other industries as well. And so one thing that we see with COVID is still in the lending and payment space, something more towards like trade finance. And I believe there was also I saw a question from somebody that was talking about supply chain management as well. And it's maybe a good time to address that as well, because when we look at trade now in general, obviously trade has been down for COVID, but it's been slowed down, but it didn't really stop. And the need to automate trade functions specifically when it comes to financing. So I'm talking about cross-border payments, transactions, like you have with the SWIFT network, which you have also with some consortiums that are running blockchain, where you are fostering a more business-to-business type of direct payment environment. We see this now accelerating as well because most of those processes still have either intermediaries in place. A lot of it's paper-based. There's a lot of manual labor involved. I mean, just when you think about cross-border payments on the SWIFT side, you always, I think there were estimates between 2 and 10% of transactions typically have some need for case management around it. Maybe that information is incorrect, maybe it's not as valid, or there's some other issues with it. I mean, all those things lend itself to case management, to automation as much as you can to reduce the cost of processing those things and quite frankly, to speed up the financing part and enable companies to expand their services, globally, especially now where, trade routes need to be changed. Companies need to be much more flexible to acquire products and services from different areas, depending on where availability is, where companies are still, producing, all those things. So it's, Laura had mentioned, it's all about speed and flexibility again, because I don't have time to implement a system for 6 months or a year in order to get my platform ready to trade. I need to be able to use an application, plug it in, and get it up and running, and then be able to expand on those components to quickly get to a more end-to-end automation. That is true for financial services. That is true for any other industry that you're in it. And I think that's the beauty for us, at least for Appian, because we play in those fields. And, it's one platform, one power, and it gives you that central 360-degree view, that panel of glass where you can see everything that you need to see and then take it from there to kick off your process or whatever you need to do.
Mm-hmm. Excellent. Appreciate that response. We've got time for maybe one more question, and I think this is one that maybe might be in the minds of a couple of people, and only one person was brave enough to ask it. So let's go ahead and take a look at this one. As a freelancer with experience in other process automation applications, how do I find training resources in Appian's products? And maybe we can even send that one over to you, Jennifer.
Yeah, I am happy to help there. So Appian has an open community site where people can interact with each other, so other Appian practitioners, as well as access our documentation and a lot of other resources, including more details about getting trained on your own. So that is at community.appian.com. So there we have a discussion forum. We have our fully public documentation. So that gives you a detailed level of how to do what, as well as an app market where different practitioners are building different pieces of functionality and adding add-ons to the tool that other people can then use and enhance their own applications. So community.appian.com is going to be a really useful place to go to start learning about Appian, figuring out how it works, and then furthering on your knowledge base there.
Excellent. I think that was, again, a question I suspected that quite a few people might have had. As clear as the walkthrough was with the demonstration, I think it was also clear to folks there's quite a bit of power, quite a bit of scalability with the platform as well. So I'm not surprised that people are curious about just that learning curve. What can people do to make sure that they're able to really take most maximum advantage of the platform? We've got time for maybe one more question that we can squeeze in that came in a little bit earlier ago, so I'm glad we were able to get this one in. And maybe, Herbert, we'll send this one your way. This has to do with sustainability. The audience member asks, are there programs that encourage or are in favor of sustainability?
Yeah, that's actually a great question because it goes, in my mind, to the heart of a lot of folks in the world that are thinking about sustainability, and I think that the term itself can be interpreted in different ways. I would right now, from our platform perspective, I would refer to sustainability as like technical depth, right? Where you basically have to consider when you use a solution, when you use a technical software platform or anything like that, what is the implied cost of like any additional reworking that you need to do in order to adapt to your changing environment, to a changing organization, to changing demand. And I and this technical debt it's much more now in the IT cost considerations a big factor, because you cannot just have one system and that runs forever. You need adaptability and flexibility for that. And I think that's where Appian and low-code, as I mentioned at the beginning, as an orchestration platform, really helps to reduce technical debt and to allow that type of sustainability going forward, where you take the reusable components, something that already works in the one area, similar requirements, you take those components, move them over, enhance a little bit on them, with what Jenny had showed with drag and drop, and create that flow and go from there. I think that's a huge advantage. It's also sustainable in the sense of ownership. It's still very much prevalent if you have a change on the business side that you need to still go through sometimes very lengthy IT change process, and you're very dependent on developers to do that. Now, with the Appian local platform, there's at least we see it with our clients that the business basically takes ownership of a lot of those functions, because it is so easy to change. Like we saw in the demo, some questionnaires, some underlying requirements, some rules, things like that by the user. You don't need to go through IT to do that. Clearly, you need to go and adhere to your IT development life cycles. You need to adhere to your testing environment, things like that. But it's something you negotiate with your IT department. But ultimately, you as the business owner are the owner of the application, and I think that's also very enabling for employees to get a little bit more deeper into this environment. So that's when I think about sustainability from a coding platform perspective. We could also ask, but that's probably a discussion for another thing, because sustainability is for me also sort of a synonym for suitability, right? We have in financial services, especially on capital markets and private equity, much more the trend of investors wanting to invest into suitable, sustainable businesses, right? And that's where the Appian platform helps, because it is used as an orchestration platform to monitor investment restrictions, to be able to on the fly change the rules, because the client investor says, oh, you know what, I want to change this now. I'm much more towards more, let's say, environmentally sustainable organizations. So I quickly want to change this without me having to go then into a system and recode everything and so on. You can do that all within the platform as an orchestration layer. So again, there's different ways of how to see sustainability, but I think these are the two ones that are most applicable for the topic today.
Excellent. I really appreciate that, and taking a little bit of extra time to give such a thorough response to the question that, again, is really increasingly widespread throughout technology, not just in financial technology at all. I'm afraid that is all the time that we have for today. I want to thank our hosts, Laura, Herbert, and Jennifer, for a fascinating presentation and technology demonstration. Of course, I want to thank you, our audience, as well, for attending our presentation as well today. Please know that you will be able to get access to this presentation in the weeks to come. It will be available on the Finovate blog in case you'd like to review or to inform your colleagues about some of the information provided here about Appian from Laura, Herbert, and Jennifer. So again, to our guests, thank you very much. To you, our audience members, thank you very much, and we look forward to seeing you next time. Goodbye.